Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, the 17th of August, 2026. I'm coming off of my first Olympic triathlon this weekend, so my body is wrecked, but the markets don't sleep for anyone, and that's why in today's video, I'll be breaking down everything that you need to know ahead of today's US session. Let's get right into it. Broadly speaking, markets are consolidating as they digest last week's U.S. data, including a disappointing CPI, PPI, and retail sales report that has dragged down the implied expectations for the FOMC to raise interest rates next month. Those are now sitting around 30% ahead of Federal Reserve Chairman Kevin Warsh's speech at the Jackson Hole Economic Symposium later on this month. That'll be the key thing to watch stateside. However, if we go a little bit north, we have a lot of things to watch in Canada this week, including the just released Canadian CPI report that came in hotter than expected at 0.5% month over month, 3.0% year over year. Some of that may be due to the World Cup. Nonetheless, even the core CPI report rose month over month, and that has traders pricing in at least 70% odds that the Bank of Canada will raise interest rates at some point later on this year. And it's also lending some strength to the Canadian dollar, as we'll see in today's chart of the day. That comes despite the fact that Wednesday at midnight, 50% tariffs will go into effect on about $20 billion of Canadian exports. It's not necessarily a massive rejiggering of trade between the US and Canada. This only covers about 5% of Canada's exports, but it is a potential a potential indication for how the negotiations are going around the USMCA. So you'll want to keep an eye on that, especially if you're trading Canadian assets. And finally, back stateside, a big thing to watch will be retailer earnings, especially after the disappointing retail sales report that we got on Friday. Throughout this week, we'll see reports from Home Depot, Lowe's, TJX companies, from Target, and from Walmart. So that'll be a key thing to watch when evaluating the health of the U.S. consumer. Today's chart of the day could be nothing other than the US dollar versus the Canadian dollar. Here on a daily basis, we can see it's been trending lower within a bearish channel since about mid-July here. And as I speak to you, we are testing the 200-day moving average. I would argue that this key support zone extends a bit below that to the 61.8% Fibonacci retracement at about 138.20. This is the area where we could see a bounce. If those negotiations over tariffs go sour, that is likely to weigh on the Canadian dollar. Meanwhile, if there's some breakthrough there, we could see dollar CAD continue to fall, extend its downtrend, and bring about 137 into play as we move into this week and beyond. That is today's video. Thank you for carving a couple minutes out of your day to watch. If you could do me just one quick favor though, before you close this out, just drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.